Hi, everybody. This is July 18th. This is the Critical Pulse show. The show is about, it's kind of along with things that I'm discussing in other show, but it's more focused on these tools that we are developing that are very interesting, very sophisticated tools based on this understanding of a market that focuses on changes of state, right? So this very in physics we have this field that is called critical phenomena, when we are understanding how you go from one state to another. For example, when we go from a gas to a liquid, or a liquid to a solid. Um, it's very interesting type of phenomena. A lot of interesting things are happening. For example, power laws show up in how different parameters are organized. You can find power laws in this phenomena, and it's a question of going from chaos to order, or order to chaos. And but you're on the edge of things, and there are particular tools that scientists develop to understand them. And then eventually, in particular, other people did that, but one of the leaders that is a point of reference for us is this physicist named Didier Sornet. He's a French physicist, but he was working in the field of geology and found very precise patterns just before large earthquakes happen. And that motivated him to look at similar behavior in other fields, like the materials, the study of materials just before the crack. For example, if there is some structural damage in a bridge, in a gas container or something under pressure, and then eventually he applied these ideas to the market, and he was very successful. He wrote an entire book about this topic. That you can read. I will put a name of a book later on the screen. That actually is very interesting to read, because it gives you kind of a framework of all these phenomena, right, in the market. And he has a terminology, bubbles, anti-bubbles, because it applies both when the market has a negative correction and when it has a positive correction, right? So it's all about this philosophy of the market understood in terms of changes of state. And I'm collaborating with Chris because Chris has a longer experience in the traditional financial field, but I was very surprised because he came up with an indicator, and this is how we met, based on some of these techniques. And then we started to talk. I saw, he doesn't have a physics background, but he has a financial background. And it was amazing how he was describing these things, talking like a physicist. I was really impressed by that. And so it's a pretty good combination, because we bring, different skills in understanding the market. He has this more traditional experience, but actually kind of in traditional finance to actually embrace some of these tools. In fact, actually, Chris can say a few words about these if you would like. We always start anyway with disclaimer that we can read. This is also part of, I'm not always emphasizing these things, but he's right, because he has the experience from the traditional market, where it's important to talk about these things. So I will show you the disclaimer in a moment. Okay, here it is. And Chris, you can say.
Sure. So thanks everyone for joining today. Unfortunately, we have to put the disclaimer up. So this is not financial advice. It's for educational purposes only. Past performance is not a guarantee of future performance, and please do your own research. And because you've all read the disclaimer, we can move on now.
Okay, perfect. And so Chris, do you want to say something about how you arrived to this, to learn about
Yeah,
the
sure.
log periodic power law and your understanding of the market, just to give an introduction to people?
Yeah, so I've been in the markets for many, many years, decades, too many decades. And along the way, I've been exposed to pretty much every trading tool and method that's out there. And I always was dissatisfied with the suite of tools that people used to try and understand markets, interpret them, trade them. A lot of them I felt were very much like voodoo. They were highly subjective and could never be applied in any sort of consistent sort of way. But these tools were broadly adopted, used by a lot of people, and that really has an effect on markets. But I think it's more an artifact, sort of a behavioral artifact. The influence still exists, and people use these, and it manifests itself sometimes in the price action. And I'm starting to think more latterly that when we have these white states that are identified by some of the tools that I've created, this is actually when we see that behavioral confusion at its best or worst, as the case may be. So, and one of the other things that I was fortunate enough to do was to engage with some of the very well-known managers and investors that run hedge funds and large investment shops. So through one method or another, I was able to osmotically absorb and understand a lot of what they were doing. And some of that, many, many years later, resulted into influencing my thinking about the sorts of tools that would be useful and productive to use in markets. I didn't want to have something that was a relic developed for stock markets of 100 years ago. I wanted something that was relevant to markets today, and that in particular would respond to the highly volatile crypto world. So that led me to focus on the work by Sornet and others, and to develop a suite of tools, the first of which is the log periodic power law critical pulse, which is the tool that we're going to talk about today.
Fantastic. Okay. And if you want to read some books about or article about Sornet, this is one I'm showing here on the ticker. He actually wrote 3 different papers on Bitcoin applying this method. That is a LPPLS, means log periodic power law. It is kind of vaguely related to some of the things I'm doing with the power law, but my power law is more about the long-term trajectory. One way of thinking of it, maybe because we see this long-term trajectory in Bitcoin, is basically Bitcoin is always kind of in a critical state, right? On the edge between order and disorder. But then what we are trying to do in this show is actually to focus more on the local action instead of a long-term trajectory. I mean, we look at the long trajectory because that gives us the stage, but then we zoom in and we look at the most recent price action using these tools. So just to start here, I will give you some of this context. I discussed this in other shows, but maybe people don't watch all my shows, so I want to give a little bit of an introduction about the general background, and then Chris will show us the different critical pulse tools that we are developing. So this is everybody that follows me is very familiar with this chart. This is the power law. We're showing the power law in the more familiar form, that is in the log linear chart. Unfortunately, TradingView doesn't have a way of showing the log of a time. If we were looking at the log of a time, this chart will look like a straight line. That is the amazing thing about the power law, right? With kind of linearize the data. But I use all the formula that you will use, in the normal log chart, but I'm showing them in this format, that is the logarithm of a y-axis versus linear time. And you can see it's a very organized pattern. There is this red curve. It shows kind of a general price. And we are following this for many, many years, right? Now, another interesting piece of information that I add here that I usually don't, but I start to show in this chart is the 4 years moving average, right? So people use different length moving averages. The reason to use a 4 year is to kind of smooth down the peaks, right? Because we see that, yes, we have a general trend, but then we have these bubbles, right? That is one of the things that we're interested here. But if you use a long-term moving average, it becomes much smoother. Then you can apply the power law to this moving average, and you can see now the difference between the moving average and the power law. That is this blue curve is minimal, right? It's very, very good model. And you can see also that this blue line is actually parallel to the red line. So the red line is a model that includes every single data point on a daily basis. And it does a pretty good job in indicating kind of like fair value. Then even when you smooth it and you eliminate these deviations, you get basically the same power law because the slope is the same. So the progression in time is the same. So it's very interesting. And we have this support line that is a gray line that, again, is basically the blue line. It's obtained in a different way. It's kind of a fixed deviation from the red power law. And if we zoom in, we have also this decay channel that describe how the peaks are decaying over time. It's basically an exponential decay on top of the power law progression. So it is not parallel to the other line. You see, it's a more complex shape. But even these can be calculated mathematically. That is amazing, that we can use just equation to describe a long-term projection of Bitcoin price. So recently, we have we are in this region where we are supposed to have a bull market. This is something that Bitcoin does every 4 years. We enter in a bull market. Usually the bull market is about 1 year long. We are projecting a peak about 200K that is based on this idea of this decay channel. The channel continues to decay. And so the change between the power law reference and the top becomes smaller and smaller with time. We don't know if we are going to arrive there because this bull market looks a little bit different from the others. It doesn't look as strong as the other, even including this decay. But recently we had a very nice move away from the power law because we were following. So the power law model is stronger than ever. If you calculate, for example, the correlation parameter is becoming closer and closer to 1 with time. And one of the reasons is also because we are not leaving the power law. We are supposed to leave the power law, and we are we were stuck to it for a long time. And now, in the last few days, finally, we see this spike, and it's taking a rest in the last maybe couple of days. But we are moving in the right direction. So this is the general picture where we are now. People ask all the time, are we going to really go to 100K? We don't know, right? It's just right now it seems that we are going at least in the right direction up, right? And we are leaving the power law. If we continue to kind of oscillate around the power law, by the end of the year, we will be more like 130K instead of 200K. And, it needs to be monitored basically week by week. Okay, so after this introduction, I will ask Chris to discuss more of a local action. And so please, Chris, go ahead.
Sure. So when we did our broadcast last week, we referenced the monthly time chart using the log periodic power law critical pulse tool to try and understand whether or not there's likely to be further upside. And this was just as the market was, starting to punch out. And we didn't. This was before the rally that occurred on Sunday night, Monday morning, very early. And what you see here is the monthly chart. And you'll notice that these parallel lines that you're seeing just here between the white are purple. And purple in the tool indicates that there's very agitated price activity, that it's somewhat unstable, but in this case, very aggressive towards the upside. And you'll notice also that there's a price that one of the tools that we've developed, which is a temporal phase model, projected a target price of $124,211. We got very close to that on Monday morning, 3:30 New York time, at 123,231. Didn't quite punch up to the level before retreating. That target is still valid. So it would take a considerable move to the downside for that target to be voided. So contextually, that's where we stand with the market right now. There's still the potential for this longer term projection to be hit at some point in the future. We don't know when exactly, but at the moment it's still a real target. But I thought it would be interesting to start the week off by looking at, I've got to change screens here, 1 second. Okay, so what you see here is a snapshot that I made of 8 time frames on Monday after the high. And you'll notice in the bottom right-hand corner, we have the daily chart, and then moving right to left, we go 8 hours, 4 hours, 1 hour, 30 minutes, 15, all the way down to 1 minute in the top left. And the reason I took this screenshot was to really highlight something that I think is pretty unique about this tool. In the daily chart, you see that we have these green bars in the background, which just indicate that we're in a generally bullish state in the market. And you can see from the candle that prices pull back from its high. And we're all thinking, okay, well, are we going to punch back up through that $120,000 level and continue on up, or are we going to retreat? And that's the question that everyone's been asking all week. And everyone's been prognosticating, claiming extreme highs and extreme lows are going to result from it going forward, but we just don't know. What we do know is that the market up until Monday had moved, very aggressively up, and it was demonstrating that it wanted to continue that move. So I thought it'd be instructive to look at these lower timeframes to try and understand what path might be evolving. And what you see here as you walk backwards through these different timescales is a fractal pattern that's evolving, that's unfolding. So, if you think of a flower that's starting to open up, the opening up has really occurred here in the 1 minute chart. And as you walk forward through time, you can see the pattern where we move from this white state and price comes down is really unfolding in each of its subsequent time horizons. And that's one of the great things about this tool. You can go to different time frames and look and see what's happening and get a sense of what's going on. And the way I described it to the folks that are using the tool is, if you think of it as lightning and thunder, you always see the lightning before you hear the thunder. And the closer you are to the source, the faster you hear the thunder. And when you have, when that happens, the storm comes, the rain comes, and then it's picked up by social media, and it's picked up by the weatherman, and it's broadcast, and it's news. And it's that point that people start trading it. So with these types of scale invariant patterns that are occurring across time horizons and time frames, you really get closer and closer to the source by observing them in this way. So you could be trading any particular time frame that you're accustomed to, but if you zoom in and out, then you get a different perspective and a sense of where the pressure is and how price is evolving. And when it stacks up going in the same direction, it's a very, very powerful thing. And one of the clues that leads to that is the distance between these two lines of the log periodic power law critical pulse and how they interact with each other. One of them we call the static line, which is the slower moving line, and the other, the pulse line, which is much more in tune with the heartbeat of the market at any point in time. And you'll see that the distance between them really evolves. And I had mentioned earlier that when you have these agitated purple states that you see here in the 4-hour chart, the lines, it just looks like one line, and they're right on top of each other doing exactly the same thing. And that's very important. So we added another tool, and I'm going to change screens again. And what you see here in the bottom of each of these screens is a little state table. And you'll see it's variously colored: blue, green, blue and red, orange. These different colors represent the condition, the state condition of the pulse of the LPP-LCP lines for both the static and the pulse line. And when they're both aligned, it's usually a very, very strong signal that the market's heading in a particular direction. So you'll notice in the second graph here, the 3-minute chart, we've got green and blue flashing. The blue is a continuation of green. It means that the market's moving up, but with not as much conviction as the green. So when they're both green like this, you can see that the market's trending up quite strongly, quite nicely at that point in time. When they're red, as you can see in the 45-minute or in the 45-minute chart, it means that the trend for that time frame is down. So even though it's moving up here, it's heading down over here. And this is kind of like, Giovanni earlier mentioned these states of criticality and being on the edge of chaos. And he mentioned, ice and steam and water. And if you think, they're the 3 states that we kind of know. It's either water, and we know what that is. It's ice, we know what that is. We put it in a drink. Or it's steam, and we use that for the iron, or for cooking, whatever. So the points that we're looking at is really in these lower time frames at the molecular level, the sort of cellular level. And if you have ever looked at water freezing, when it's going from the liquid state to the frozen state, you start to see the crystals starting to form in the water. If you look at it under a microscope, or if you watch the agitation and the boiling of the water in a pot before it turns into steam, those are the states that we're looking at with these lower time frames. And it's that type of analogy that you get here. So if you want to know when something's going to turn to ice, don't look at the water in the ice cube. Look at the substrata, look at the structure underneath, zoom in with the microscope and see what you can figure out. And that's what we're doing here. So these different states are constantly changing as the different relationships of the lines evolve. And they give you clues as to what's likely, going to be transpiring. So if we change scale here and go to the daily chart and just make it a little bit bigger, what's really going on? So we initially had this strong move up, and remember we said that the purple lines were right on top of each other, and the lines were very strongly coalescing. But now we can see that we're getting some separation in the 2 lines at this upper level, and the behavior is a little bit different. So right now we've re-entered a white state, which means we don't have conviction in terms of direction. But we know from the longer time frames, the monthly, that we still have valid upside. And we know from the lower time frames that we've got this evolving set of uncertainties occurring. Let me just see if I have. Just bear with me. Yeah, let's go here. Okay, so this is the daily chart again. You can see the same thing, but you'll also notice that we've got a downside projection here, and this is the temporal phase model that I mentioned. So what this tells me is that as we've entered this white state, the market is just going to bounce around a little bit and start to generate targets above and below this white state level, depending on the specific price movement as it evolves. And as you go down in time, you'll find that the number of targets that are being generated change as a function of the time frame that we're looking at. And you can see that there's a bunch of them sort of currently heading to the downside. And as I continue to go down in time, we get a mix. We get the orange cross, which is an indicator built in that tells us that the signals are in conflict with each other. And we've got, a bullish signal right here in the 2-hourly time frame, but we still have lower targets down around 112, 114,000. Now, all of these targets can be invalidated as a function of the price activity. And if you go right down to the much, much lower time frames, you'll see that we've had a series of them to the downside here, which were all met, then a series to the upside, which were met, then a series to the downside, which were being met. Then we run out of downside targets and we start generating upside targets. So the point of these fractal-like similarities and patterns that just recur across the time frames is really powerful and valuable to spend time getting to understand, to put context around what it is you're trying to achieve with your trading at a point in time. So the takeaway for the moment is on the daily chart, the longer term charts, that we're in a consolidation period, the white state again. But if we go and look at what's happened historically with these white states, with Bitcoin, you end up in rallies having these stair-step type conditions occur. So we have this rally from a bottom here, a stair-step, rally, flattening, a rally, a flattening, a rally, a flattening, and so on, until we had this last large consolidation period in the early part of this year, the pullback, and now we've embarked on another rally from the bottom. We had the first stair step here. We've rallied again. We have another consolidation period here. We know we've, from the longer term, got another target, the target sitting up at 124,000. But in order for this daily chart to set itself up for a run to the upside, you need to have this back and forth activity around this level between probably 110 or 11,000 and 119,000 to set up new targets for the market to become attracted to. So these combination of tools that we've developed all work hand in glove to give you a sense of what's unfolding in the market across different timeframes, and that helps give you the path to what's likely to unfold going forward. Not a guarantee, of course, but a better roadmap than a lot of the other tools that are available.
Great. So right now, to summarize, we had this run up, right? We were kind of coasting for a long time in this white area, white line area, and now we transition to another one, right? This is why the price looks in the last few days that is basically oscillating. So we're we need another update.
It's a very aggressive move. I mean, the market went from 110,000 to 120,000 in a day or two. Big percentage move. So it needs time to take all of that in.
Right.
And that's exactly what's happening. There's not conviction at this level one way or the other, which is why it's a white state. The market has not got conviction, but the overall direction is still positive, but we're consolidating. So that's where we are.
Okay. And Chris, you were telling me also before that, so Chris also has an X account, so please sign up on, follow him on X. What is your address again?
It's Complex Trad, COMPLEXTRAD.
Okay, perfect. And you were telling me you just made some posts that discuss some important topics, right? One in particular.
Yeah. So exactly.
Yeah.
So let me just share that with you as well. I think
sure.
That might be instructive. Okay. So what we have here is a Sankey chart. And a Sankey chart is really a flow diagram. And on the left, you have all the different participants from the marketplace. And let me just move this. I can't see very well. Here we go. So in the top left of that Sankey, we have lost Bitcoin. And the numbers in the Sankey are really just a weighting scheme to try and give importance to the different categories as opposed to an accurate, exact number that quantifies participants in this scheme. So we have hodlers, we have miners, we have treasury entities, we have sovereigns, we have people who are trading, liquidity providers, option traders, and it sort of traces their activity and what actually happens. How much of that is open interest, is total short exposure, how much of the activity is triggered by margin or squeeze ignition, by protocol activity. And all of this came from the period of consolidation. What I was trying to understand why Bitcoin hadn't rallied since the early part of this year, why it was really stuck. And I thought, maybe it's because there's a lot of people shorting shorting Bitcoin. And I was trying to understand that. And the only way I can come to understand it was to really map out the market and the participants, which is what I attempted to do here in this Sankey diagram. And I then thought, okay, well, this is really what's driving liquidity, and this is what's really driving volatility. And embedded in
I like this chart.
Embedded in this this system is a structure that automates sort of reflexivity, if you like. And it's not like a regulated exchange. It's a decentralized operating system with a bunch of people participating through it. And what it means is that there are bots and there are algorithms and there are exchanges that are interconnected in this way, not like, the New York Stock Exchange and not like the Chicago Board of Exchange, where inefficiencies and automated processes create volatility. And the volatility is not being created by a whale that comes in and takes some massive order on the buy or sell side, or some hidden hand trying to manipulate prices. I mean, yes, absolutely, there are big orders that go through the market from time to time, and those orders are described by many as being a whale, but that's not what's really happening. What you have is this Rube Goldberg of a machine that's essentially automated chaos, and it's not regulated in the way usual markets are. It just functions completely differently, and this is what generates the actual volatility. So I posted about this because I thought it was interesting, and I've actually written a paper about it. It's going to be part of the book that I'm writing. But I thought that was a way of understanding why the market moves the way it moves. And some of these, it's not completely clear here, but you'll see here between DeFi debt and total short exposure, this creates a feedback loop, the interaction between these. The interaction between volatility and auto liquidation creates a feedback loop. And these things by themselves can be incredibly violent. And what we witnessed on Monday night, the period from Friday through to Monday night, when we had that run up to 123,000, was exactly this type of thing. So what some people see as shorts getting liquidated out is true. There's absolutely elements of truth in that, but it's really this macro dynamic as a function of all of these different traders, from sovereigns that are just starting to become emerging holders, through trading desks, through oracles, through funding flows, through cross-venue fragmentation, through borrow, through options, delta shorts. And it's not just the delta shorts, it's the gamma. If you're negative gamma is a horrendous thing to have to trade if the market's in your face and moving against you. Because
for the people that don't know much about options, can you tell us about gamma? What the gamma represents?
Sure. So options have a number of, they're often referred to as Greeks, which are methods of describing the interrelationship of price to the option or option to the price. And delta is the most frequently used term, and it relates to how the value of the option moves in relation to the price. So something that has a 50 delta means that if the price moves 1, then the option will move by 0.5, and so on. And if you're positive gamma, that means that, and gamma is the delta of the delta, so the rate of change of the delta, and gamma describes exactly that relationship. So if you own one option and it moves, the price moves up by 1, then your option moves up by 0.5. But as that process continues, if the price continues to go up by 1 or 2 or 3 or 4, your delta actually increases. So you are positive gamma. So your delta is increasing at a positive rate. And your delta goes from 0.5 to 0.6 to 0.7, depending on the magnitude of the move. And in a move like we had on Sunday night, Monday morning, with this huge rally in Bitcoin, that delta effect, that negative gamma, the positive gamma, if you're long calls, for example, is tremendous. It explodes in a non-linear way that's very beneficial if you're an owner. And if you're short calls, then you're in the opposite position. And to get neutral, to hedge away the risk that's happening as the market's rallying, you have to buy more and more at higher and higher prices as the market moves up. And that's a very, very difficult thing to manage. So that's what negative gamma is. And in the context of this Sankey diagram, anyone who's got a negative gamma position, as the market's rallying in this vertical type of way, has a very, very difficult time and has to move very quickly to hedge themselves. And they may, in fact, overhedge if they believe the momentum and the velocity of price is so extreme that they're better off hedging themselves now as opposed to later, when their systems may tell them to do that. And of course, these days, a lot of that trading is automated, which means that it's an algorithm or it's a bot just implementing the transaction. So that accelerates these moves. And that's why we end up with these purple states that I talked about earlier, where there's agitated price and what's called period doubling. It's sort of like a feedback loop. It's like if you hold a microphone to an amplifier, it feeds back on itself, and it's a self-reinforcing sound that gets louder and louder and louder and louder until it breaks the speaker or someone turns the mic off. So yes, it's exactly the same effect.
This is very fascinating. I wanted to ask you also, do you have any idea or insight about this important topic? Many people are trying to figure out what is going to happen. If we have a peak, let's say we have a peak, and not necessarily all the way to 200K, but some kind of higher position relatively to where power law is, right? That maybe indicates some kind of a peak. Do you think we're going to experience, and this is more like a microeconomic question, right? Are we going to experience some kind of a bear market? Because, for example, we just interviewed Saylor, and people look at Saylor like a point of reference. It does have experience with the market, but I don't think he's a very precise market analyst. But he was very strong in claiming that we are over in terms of having this, they call them crypto winters or Bitcoin winter. Usually they last 1 year, when we have an entire year where we are simply going down, right, from a particular peak, and usually we go to that support line. Do you think Bitcoin is going to show cycles in the future, or
well, it already has cycles. I mean, in your log periodic power law charts that you show, it's got a demonstrated 4-year cycle.
Right. But some people say that we are not going to see that anymore.
Why do they say that? I mean, what's the foundation for that statement? So let's kind of let's
vibes.
Yeah. Well, let's break it down. So mathematically, from your work that there's a 4-year cycle, and if you do a fast Fourier transform or any other type of sort of phasing methodology, you'll find other dominant cycles, and the dominant cycles evolve depending on what's going on with price.
Yes.
And you will find that there are multiple cycles within Bitcoin. So the answer to the question is yes, there are cycles in Bitcoin, and there are many of them, and certain are more dominant at different points in time than others. And also, the distance between the peaks and between trough to trough, peak to peak, is not constant. It has variation. So, and the variation is caused by, I would say, the fundamental pressures that exist in markets at any point in time, influencing, price. And what we're and you mentioned something earlier, where you thought this cycle is going to be a little bit different from prior cycles. So the magnitude of the rallies is diminishing, if I'm understanding correctly. Yes.
Mm-hmm.
Okay.
Exactly. Yeah, there is an exponential decay.
Okay. So wouldn't that apply also to the downside?
No, because actually it's really interesting where if you look at the same chart, right, of a deviation from the power law, the decay of a peak is very clear. Sorry for that. But the bottoms are very stable. The bottoms are similar. That is really interesting. It's always about a 60% deviation from the general trend.
Right, but they're always higher year on year.
No, I mean, they are higher because the power law goes higher.
Yes.
But in terms of deviations, they are the same deviations.
Okay.
It's a really weird. It's a really interesting behavior. It is, unique to Bitcoin.
Yeah. So.
So one interpretation is to say that is kind of a bottom for Bitcoin because it has to do with the cost of production of Bitcoin. So you don't want, probably we are not going down that because it doesn't make sense for the miners to sell. Usually the market is exhausted when we are ready to go there. And on top of that, the miners don't sell. So see, this is the chart. Like if we zoom out, so this is why historically we never went below that, below this gray line. So the gray line, it's your reference.
Yeah, this is what I was referring to.
You see how the distance is always constant. So while the distance from the red curve to the yellow, to this orange channel that indicates more or less the trajectory of the peaks, is becoming smaller and smaller. It was like the first bubble that we ever had. That was a deviation about 15 times from the power law. Then it went down to something like maybe 11, and 5, 3, and the next one is projected to be 80%. So this volatility is decreasing, right? Of this turbulent flow. I call this a turbulent flow because it's much more irregular than what we have when we are here in this region. When we are here, it's we spent 2 years in this region, and it's more or less like a Gaussian that is centered to kind of the middle. So the distance between the top and this red line and this gray line, and we are very narrowly concentrated in this green area. We usually, in fact, just a few times we left it, and then there is always a correction. They bring us back. Same thing here. This was run up. It happened just after they announced the ETF, so probably there was a lot of excitement due to that. We reached the power law, and then we corrected. So yeah, that is interesting. That so one way of thinking is that the real power law is really this bottom line. Then we have deviation from it, right?
Right.
We go up from there.
So two things. I mean, when I say, when I was talking about the bottom moving up, I was thinking of this gray line. But I think the other thing and this is where I kind of change hats a little bit, and I start to think of Bitcoin from what I'd call a fundamental perspective. And if you think of the changes that are occurring and that have occurred in the last 12 months for Bitcoin, what are they? Well, it's adoption by a broader set of investors
Right.
than previously existed. And that rate of adoption is accelerating. And this brings an entirely different dynamic to the marketplace. And it's borne out in that Sankey diagram. I bet if I did that Sankey diagram 2, 3, 4, 5 years ago, the number of participants would look very different.
Sure.
And you've got a broadening in the base of the participation, not just from ETFs, but all sorts of other participants who are taking supply away from the market. Mm-hmm. So we have currently, there are two very significant forces in that. One are the ETFs, and the other are these proliferating treasury companies.
Yeah.
And they're busy snapping up all the Bitcoin that they can because they can fund it. And as long as they can continue to fund it, which they can if people are prepared to buy the equity, then that's stock that comes off the market. It reduces the free float, if you like. And with a lower free float, there's less supply circulating in the marketplace. Now, the velocity of supply will increase as you get people like market makers that are making prices on Bitcoin on a speculative basis in the short term. So that velocity increases and helps pick up some of the demand imbalance.
Right.
And as long as those people are able to manage their positions okay, that's great. But when you have an event like this past week, where you had these very rapid movements upward in price, what happens? Well, their ability to manage is a function of the algorithms and the bots that trigger and execute their methodology for them, or that close out their losing positions automatically by their brokers or whatever. So those dynamics that were illustrated in that Sankey diagram are all contributing to this new regime, new structural regime for Bitcoin. That's going to, I think,
well, the question, and that is kind of what people like sailors say, like,
mm-hmm.
we have different participants, it's a different type of game now, and we will not see a Bitcoin winter. I don't know why that leads to this, right? So it's possible that maybe we don't see the violent moves that we saw in the past, also because we are dealing with a much smaller market cap. It's much easier to move a market cap that is a few $100 million than a market cap that is trillions of dollars, right?
Correct.
So, but the fact that we don't see cycles anymore seems going against everything we know about how market works, because there are cyclic behavior in, the PMI index or whatever. These things have existed for, decades, and people follow them very closely because humans are cyclic, and the 4-year cycle is actually something that comes up in many different human activities, right? The Olympics, the presidential elections, and so on. It's something that happens on a regular basis. So I don't think that he's correct with that, right? It's probably true that you're not going to see these huge big peaks like we had before, where we go 10 pair away from the general path, and the correction. So it's possible also. I like this idea to have a reference price, but we don't have to go there. Like the reference can still be there, and the oscillation can be only around this red line instead of going back all the way to the gray line.
But I like to think about what's changed and how those changes can influence price activity and perception. And right now we've got announcement after announcement coming through from people who are emulating the Saylor model. They're following strategy and issuing financial instruments and taking that cash and buying Bitcoin.
Yeah.
And you recall from our conversation last week that the arbitrage that people are doing against that trade is when the MNAV of the issuer, and in the example that we talked about last week, that was strategy, MSTR, when the MNAV is greater than 1, you short the stock and you buy Bitcoin. And that's a virtuous cycle for Bitcoin. And it's great for MSTR because their average price is, in the low $70,000 type range, mid $70,000 range probably by now. I don't know. But you've got a stack of Johnny-come-latelys who are doing the same thing. They're issuing financial instruments, be it stock or convertibles or prefs or all sorts of different things, and they're buying Bitcoin at today's price. So their average holding price is spot, whatever the current Bitcoin price is.
Right.
So their MNAV is probably very close to 1. And as long as Bitcoin keeps going up, they're going to be fine. But at some point, people might start looking at them and saying, okay, well, maybe I should be shorting that stock.
Yeah.
Because so you've got this influx of new players, some of whom can be weak hands, depending on the financial structure that they've put in place that underpins their acquisition of Bitcoin. And that's a brand new dynamic. It didn't exist before.
Yeah, I agree. Yeah, it's interesting. But yeah, so in conclusion, I think maybe the cycles are going to be more muted, but they are going to be there. I don't believe that we are going not to have cycles anymore. I don't think that. I will be very surprised by that. Let's say.
I agree. I mean, there are cycles everywhere.
Yeah. Okay, so we can keep the show within an hour today. I don't see any interesting questions. I don't know what this PWBTC is. For example, we have this one, but I don't know what PWBTC is. It's performing a real BTC. Anybody knows what Frank is talking about? Or Frank, do you want to elaborate? Anyway, so I think we cover a lot of interesting material. I really like your insights about the structure of the market and who the participants are. And let me remind everybody about our website. We're working on the website. We are going to add more information so you can learn more about these ideas. Let me share that with you. Just to say, do you have the page, Chris?
Yeah, I do somewhere. Hang on. Somewhere.
Okay. Yeah, do you want to tell us a little bit about the page and
sure.
What you can find?
So there's this is our site. You can sign up for our newsletter at this top of the header here.
And by the way, the newsletter will come at the end of the month, so please sign up so you will receive the first issue of the letter.
And as you scroll down, you'll find a little bit about what we're doing. This link right here takes you to a place where you can subscribe to the log periodic power law, which is the tool that I profiled earlier. And you click the subscribe now button or this learn more button, and it'll tell you a little bit more about what the tool is and what it isn't, and what we think of state change. And we really just think of these the market being in two states. Price is secondary. If you know the structure and you understand that we're moving into a period of uncertainty, what the heck's going on, the white state, which is, I don't know what I'm doing state, then it's very simple what you can do. And if the market's moving with a purpose, it has a direction, it could be up or down, but it's very clear what it's doing. And everything else flows from that. So that's what this tool does. And it's available now for subscription for use on TradingView.
And there is a Discord channel associated with this, right?
Yes, there is. And then as you scroll down, you'll see there's 10 other tools, a total of 10 tools that we're building. These all work hand in hand with each other. And if you click on them, it tells you a little bit about what each of them does. So the temporal phase model, which is the one that I showed a little earlier,
How do you get more information about them?
Yes, if you just click on one of them, any one of them,
Yeah.
you can click to register your interest in it. But they'll all come on stream in the next month or so.
Okay.
They're all fully functional right now. I'm just cleaning
Is
them
there
up a
an
little bit.
explanation of what they do somewhere where people?
Yes, if you click on each icon, it'll tell you. So this
yeah,
one
we'll
here,
tell you. Okay, perfect.
yeah, it tells you a little thumbnail sketch of what they do.
Okay.
But depending on your style of trading, you can mix and match these with the core, which is the log periodic power law or critical pulse tool. So they all work with that one way or another and do different things.
Perfect. Yep, this is great. And we will add some material, some reading material for you guys, so you can actually explore some of these ideas, maybe book list and all kind of things like that. Okay, great. Thank you, Chris.
Okay.
Great. All right. So we will see each other next week. Like I said, right now, Chris told us that we are in a waiting period. We will see what happens if there is an update in the data. So please tune next week for the update.
Thanks, Gio.
Thank you so much.
Thanks, everyone.
Bye.
Bye.